Thanks for joining us on the Market Day Report. I'm Arlen Bowling with you, and it's a Monday. And I wanted to take a look at our market calendar to see what lies ahead between now and the end of the month. There are a few major things that we need to make you aware of, so let's go ahead and pull up that calendar and take a quick peek, if you don't mind. Well, of course, today is the 12th, and we just got our export inspections out about an hour and a half, almost 2 hours ago now, and we have been covering those for you. Coming up on the 14th this week, we're going to have your last trading day coming up on your December contracts of things like your Chicago, Kansas City, and your Minneapolis wheat, also on your December corn. Also on your December lean hogs, and we have your December oats and your soy oil coming up as well. Last trading day, that will be on the 14th. On the 15th, it'll be the NOPA crush report, and that will be coming out at 11 o'clock in the morning Central Time on the 15th. As we move further out on the calendar, a big day before Christmas. It's going to be a triple header, if you will, of livestock reports. Going to go out with a bang here before everybody takes that Christmas break, and it's going to be the monthly cattle on feed report, and it's going to be the quarterly hogs and pigs report at the very same time, along with a cold storage report. You don't see that happen very often, kind of like once in a blue moon, but it is going to happen on December the 23rd, and they will all come out after the markets close up. Interesting, because the traders will probably already be home for the day for the Christmas break, and there is no trade that following Monday, so they'll have to wait 4 days before they can even trade on that. Let's go to the trading floor in Chicago and find out what's going on with expert analysis right from the edge of the trading floor. We have Tim Evans standing by. Tim, how you doing?
Hey, I'm doing well, Marlon. How are you?
Good to have you with us. A lot of activity going on. Tim happens to be with Longleaf Trading. And Tim, as we look at this market activity, we've been talking about this all morning about the U.S. dollar going sharply lower, the crude oil market going sharply higher. Is that something that is going to last, though? I mean, are the traders on the floor talking about that just being a temporary one-day wonder, or what?
Yeah, I mean, a concern out of China last night kind of got us off to a really negative start. I mean, we also, while that was occurring, we got a big gap open in the energy markets, based on some comments from Saudi Arabia, which fueled the biodiesel or biofuel markets overnight. So, I mean, that got us off to a big start, and then that concern with China that I just mentioned kind of forced the market lower. So it's been some pretty wide ranges here so far over the last 12 hours.
All right, so let's take a look at our corn prices right now, our soybean prices, the wheat. Let's run them down. And on the corn, we've had weakness ever since the overnight trade started. We have the March contract on the corn down $0.015 right now at $3.58 per bushel. It's right in the middle of our trading range of the day, so it's still fairly quiet. May down $0.015 as well. On the soybean trade, that's the one that has really been interesting because we were fairly sharply higher in the early nighttime hours. And right off the bat, when we started the daytime session, we went lower. Currently, we have March soybeans down 6 1/4 cents, trading at 10.42 1/4. That's still 16 cents off our earlier high of the overnight session. The wheat trade, though, in Chicago wheat, we have the March contract still down 3 cents at 4.13 1/4. Usually, Tim, this wheat market reacts a little better to when you have the dollar dropping like a rock, like we're seeing today. But it's not able to help the wheat market out at all today. How come?
Well, I mean, that Friday's supply numbers obviously showed a lot of supplies on the market. Where's all this buying going to come from? I mean, the question marks are still there, and I mean, the market, in my view, just isn't showing a whole lot of confidence that wheat's ultimately at levels that makes it attractive. I mean, the old adage is, low prices are cure for low prices. We started to see those spread differential between corn and wheat, start making wheat a little more favorable for, as a feed source. So I think, if we see that trend continue, we could see wheat hitting levels, to form a seasonal bottom.
All right, well, Tim, stick around. I want to bring you back here in a moment. We'll talk a little livestock trade, too. Our very special guest, Tim Evans, he's with Longleaf Trading, and we'll be back with more with Tim when we come back right after this. Well, we're back with you here on the Market Day Report. I'm Arlen Bowling with you, and I wanted to make one correction. I'm glad Mark Oppold pointed that out to me. That is an exceptionally unusual situation on the 23rd of December. We were talking about the cattle on feed report coming out with the hogs and pigs report and the cold storage report. They always come out at 2 p.m. in the afternoon after the markets close. But on that day, they are coming out early. Thank you, Mark, for pointing that out. 11 o'clock in the morning Central Time on that triple header of livestock reports. I just wanted to point that out and make that correction. So make sure you jot that down. It will be out at 11 o'clock in the morning on all three of those livestock reports on the 23rd, ahead of Christmas Day's break. All right, let's go back to the trading floor and talk with Tim Evans of Longleaf Trading. And Tim, let's talk about this livestock trade. Boy, the cattle market, it was like you shot it out of a cannon this morning, right out of the opening, and that's after a sharply lower cash cattle trade last week. A lot of folks kind of scratching their heads on how that happened. Maybe you can explain it.
Well, I was having some conversations late last week and even over the weekend, and the sense that I have is that what we're seeing is a lot of forward contracting where packers are expecting higher prices. So they're not coming in and putting bids in the cash market, but utilizing forward contracts to secure that buying. And that's why we're seeing the movement in the cash to future spreads.
So on the live cattle trade, let's go take a look because they've been pushing that envelope up there toward going limit up today. We have the February contract last quoted now at $113.28. That would be up $2.76 from our close on Friday afternoon. April now up $2.43 at $112.68. Let's take a look at the feeder cattle trade, and in the feeders we have January up $2.67 at $128.62 per hundredweight. And in the March, we are $2.35 higher, quoted at $124.85 per hundredweight. So we're either above or right below $3 off of our lows of the day. And Tim, I wanted to get your impression. Sometimes they say when the nearby contracts lead the way, that is an even more bullish sign. Do you read much into that at all?
I absolutely do. I mean, I think what we're dealing with is a weather situation. We've had brutally cold temperatures in the northern plains and Midwest, and most meteorologists are calling for a continuation of that trend. There seems to be a lot of concern that we could see weights impacted here over the next month or so. So we're seeing a lot of forward buying based on that as well.
Very interesting. Yeah, it's going to take a lot just to maintain the animal's body heat, just to maintain its health out there instead of putting on a poundage, that's for sure. I want to look at the lean hog trade here right now, and on the lean hog market, we'll start with that February contract. Up 75 cents now at 62.30, getting closer to our highs of the day again, within a dime. April up 72 at 66.67 per hundredweight. So just a couple of ticks off our high of the day. Real quickly, do you think this is something that we can hang on into the close?
I do. I mean, we're approaching last week's highs, and those highs even going back to the highs we saw in August. I think in today's close, we could hang on to that. But I mean, the question is, are we able to get through those highs? And there's some concerns that I have with the market moving forward. Typically what we see is a decline in production going from Q4 to Q1 of the next year. We're not seeing that this year. That decline in production typically allows for firmer cash prices in Q1 of that next year. So there could be some concern, that cash prices may not be as firm to begin next year as they are on a seasonal basis. So, that's something to pay attention to, and I think a lot of traders are going to be focusing on that in the weeks to come. All
right. Well, Tim, good to visit with you. Tim Evans of Longleaf Trading Group, and we appreciate the comments on that. So there you have it, Mark. The cattle market still like it has jet engines.
Exactly, and the hogs right behind them, or if not in front.
Yeah, exactly.
Thank you, Marlon.